Hello, good morning, everyone. Yeah, Issa Sadiq, my friend from Ilorin, I believe. Good morning to you. You're welcome. Can you confirm you can hear me? Emmanuel, good morning to you, sir. Obviously, audio, I believe it's good. All right, thank you. Issa Sadiq. Larwaju Akisaya, good morning to you, sir. You're welcome. Thank you for joining. Christopher, thank you, sir. Thanks for the confirmation. Good morning to you, sir. Great. Felix, thank you very much. Yeah, wish you the same, sir. Thank you. Good morning. Thank you for joining. All right, we're going to get started in less than a minute, just to allow more people to join in. Okay, great. Thank you very much for the confirmation. All right, I believe it's a fine place to start. Waited about 10 minutes so far. Yeah, Thomas, thank you very much for the confirmation. All right, so let's get right to it. Um, all right, so good morning, everyone. Good morning, ladies. Good morning, gentlemen. And good morning, traders as well. If it's your first time, here is we saying good morning to you. You're welcome on today's edition of our morning market review, MMR for short. Okay, so every day on this forum, we get to look at Femi and call. Good morning to you, sir. Thank you very much. I wish you the same. Hope you're having a great time with family. As a quick reminder, we get to look at what's going on in the markets. So we try to look at the fundamentals that we have, and then we head over to the trading platform for technical setups as well. And I usually say that we do this with the hope that we'll be able to pick a few entries from the analysis and then Also trade ideas, especially for today, all right, trade setups for today. And then we also look at one or two assets that we can also have to our watch list, all right, for the rest of the week. Okay, if we do not find like an instant setup on those assets, right? So let's get right to it without wasting any more time. All right. Let me also use this opportunity to wish us compliments of the season. It's the new year in um, less than 2 days. Okay, it's the new year, right? I hope we're getting to spend some decent time with family, right? Okay, so I'm going to head over to forexfactory.com to see what we have in terms of fundamentals. Just a second while I do that. I'm going to share my screen as well. Okay, so this is forexparty.com, the preferred economic calendar. I like the way it summarizes all the events. Okay, so you'll see date, you'll see time, you'll see the currency of interest, you would even see the kind of impact the news is going to have on the currency. Okay, and then we have this data here towards the right side to focus on to guide us on how to trade that particular currency by the time the news is released for you. Okay, so for instance, if you look at Monday, December 29th, which was yesterday at 4 p.m., we had pending home sales for the dollar. Okay, what it means is that at that time, we'll be looking at opportunities on the dollar for that particular news. All right. So here we have the effect. Actual greater than forecast is good for currency. All right. So we come here, previous forecast actual, and it says actual greater than forecast is good for currency. And here, the actual result came out as 3.3%. Actual greater than forecast is good for dollar. All right, 3.3% greater than 1% is good for dollar. So at 4 p.m., would have expected some volatility, some fast movements for the dollar. And of course, that would have presented some opportunity at the time. All right. So this is gone already. But for today, Tuesday, the 30th day of December, we have FOMC meeting minutes. And this is, you see, it's red, which means that it's going to have a high impact on USD. It's going to be released by 8 p.m. Okay, so it's one to watch, very important. Um, 8 times per year, more hawkish than expected is good for currency. Okay, now in this case, you will notice that we do not have any figures here. Okay, this is because it's going to be like a speech, and there's no way to measure that. Okay, there's no way to measure that, and that's why we do not have data for, or we don't have figures for that particular names. So what to do in this instance is to now look out for the tone, all right, from the for the tone. Okay, that's why we have more hawkish than expected is good for currency. So we have hawkish and dovish tones when it comes to speeches like this. And the FOMC, for the FOMC, that's like think of it like the principal's office for the entire US economy. All right. FOMC simply means Federal Open Market Committee. So it's like a group of 12 big bankers. They meet like 8 times in a year. And that's why we have 8 times in the summary. And their main job is to decide how much it should cost to borrow money. It's as simple as that. they make decisions on how much it should cost to borrow money. Okay, and of course, that's very, very important for an economy. All right, how much money is going to cost. So, the main tool that they use, of course, is the interest rate. So, they are majorly in charge of the interest rates. And for this year so far, we've had quite a number of rate cuts for the dollar. All right. So control the interest rates, and you can think of this like the price tag on a loan, okay? Interest rates. Now, if they raise rates, it means it's going to become expensive to borrow money, all right? It's going to become expensive to borrow money. Now, what that would also mean is that people are going to spend less and the economy slows down, all right? And on the other hand, if they lower rates, that means it's cheap to borrow money because the rates are low. All right. So people go out and buy stuff, businesses hire more people because there's plenty of money, and then the economy speeds up. All right. That's what is expected. So at every point in time, the FOMC decides whether they're going to raise rates or lower rates. And that's how they try to stabilize the economy. Okay. By depending on the statistics, what's going on in the economy. All right. So they look at employment data, unemployment data, and so many other data like that in order to determine whether to raise rates or to lower rates. Okay. Yeah. So it's important because during this meeting, of course, so much will be said, and then it's like the whole world is going to be taking a breath, of course, because it's the dollar, okay, because it's the dollar. So they're going to, for today now, they're going to be releasing the documents, okay? So, of course, uh, it's going to be made public, of course, and then we're going to see what happens, and then what they say about the economy, where it's headed, pointers to look out for. Are we going to be getting more rate cuts and things like that? Okay, so it's a major one, all right. It's a major one, and then we want to pay attention to that. That's like the only high impact news for today when it comes to fundamentals. All right. So FOMC meeting minutes 8 p.m. All eyes will be on the USD for that particular time. All right. Um, so that's it for um, the USD for today. So that's it for the fundamentals. That's what it means. Now we head over to the trading platform to see the technical setups that we have. All right. Just a second. I'm going to switch my screen so I can put up the trading platform. Right. So I have the trading platform up. And of course, as is our usual practice, starting again with the dollar index, all right, with the dollar index, and I have it right up the dollar index, right, the dollar index, because once we understand the direction of the of this index itself, it becomes easy, right, to relate this to the rest of the major pairs, all right. Now, for instance, we have Euro USD, we have Pound USD. All right. Those two as an example, right? So because we have USD as the counter currencies in those two assets, right? So what it means is that for the USD index, if it is going up, then we're going to expect euro in euro USD to be bearish. And at the same time, for pound USD, we're going to expect that to be bearish as well if this is pushing higher. All right. So, and that's why for me, I like to start with the dollar index. Okay. So here, if you look at what's going on the monthly time frame, now don't forget, we really, I always like to have that right. So you don't open your chart and then stay on the monthly time frame. You really don't need that, especially because we are mostly scalpers, intraday traders, and day traders as well. Okay, so for either the weekly time frame or the monthly time frame, they are so far out that they really don't have much relevance to us as day traders. So as much as possible, for me, I like to start on the daily time frame. I believe that's the best place to start for me. And then on that time frame, I can overall determine the trend, the key levels, uh, important support and resistance levels. That's what I'm looking for on the daily time frame, right? So that's like my anchor chart where the main analysis is carried out, either the daily, and then sometimes I go to the 4 hours as well when it's difficult to see a structure on the daily time frame. So I could switch to H4 time frame. Now, once I confirm the structure on either daily or 4 hours, then I go as low as the 15 minutes time frame, right, to look for entry opportunity. Now, what that would do for me is to give me is to make sure my entry is more precise, and then it's also going to give me a fantastic risk reward ratio. Now, when you set stop loss on your 15 minutes using the last low, right, you would notice that the stop loss amount usually is going to be lesser as against setting it on maybe H4 or daily time frame. All right, I'm sure you must have noticed that. So that's why setting it on the 15-minute time frame usually would give a more precise entry, like I said, and then you have a tight stop loss. Okay, so once you're wrong early, it takes you out, and then you're looking for the next opportunity. But when you're right, you win really big. Okay, so that's what I do. Right. And I also believe that once you master the art of analyzing multiple time frames like this, then you'll continue to get clearer and more accurate understanding of the market, right? And once you have that, it's going to continue to lead to you making smart and profitable decisions. Okay, so that's why multi-time frame analysis is quite important for me. Right. So USD index on the monthly time frame. So even though we really this time frame doesn't have much relevance to us as day traders, however, I still use it to get some perspectives in the market because looking at this monthly time frame now, I have this ascending channel here, and then started since end of 2010, all right, end of 2010, even here as well, 2008, okay? So from this point now, from 2010 or thereabout, price came to this low, okay? Highlighted with this trend line, and then a few pips away here. This is the monthly time frame now, and then here give us some double top, and then aggressively push higher at the time. And fast forward to what we have now, price came back to the same trend line sometime in June. And then in July, we got this bullish engulfing candle. And so far, it's as if it stayed on the same spot on this monthly time frame. Right. Now, looking at this December candle, right? Looking at this December candle, it is now a few pips away from that trend line. Okay, it's now a few pips away from that trend line. And then we're beginning to see price push away, highlighted with this lower wick. All right, we're beginning to see price push away from that trend line. All right, and then coincidentally too, we have it sitting on this 97.7 support. Now, this is one that I emphasized multiple times during the last session here, which I believe should be 23rd, this 97.7 level, right? Back this month, you see how 97.7 impacted price right here, all right? This was April, I believe. This was back in April, stopped at 97.7. And then this was August as well. And then this October, and currently December, also 97.7. All right. So at the time price tested this trend line, I remember highlighting to us at the time that this could be the bottom for the USD index, and then we now see price continue to push higher. All right. And then if you look at this 100 level 200 price level, it has also impacted price multiple times, okay, acting as resistance. Price so far has been unable to go above that level, has been unable to go above 100, okay? It's almost as if it's stuck between 100 and 97.7. Okay, so with that in mind, we now head to the daily time frame, which is, of course, like I said, our anchor chart, all right? Yeah, for the same reason, you need that higher time frame for to get, like I said, in the important key levels. All right, you need important key level. You need structure, and then you'll find that on either the daily or the 4 hours time frame. Okay, that's why I said I like to start from there, at least to eliminate some noise. So instead of starting on maybe all those lower time frames like 15, 30, or even 1 hour, I like to start on either H4 or D1. And like I said, it's to get some clarity, it's to understand the overall direction of the market. Okay. And then once I confirm that on daily or weekly, I then tune down to a much lower one, like I said, either 15 minutes or 30 minutes sometimes, but mostly 15 minutes to look for entry opportunity. Now, I said that the weekly or the monthly time frame are so far out that they really don't have much relevance to us as day traders. Okay. So picture is this way, like let's say you're trying to spy on your hot neighbor. Okay, we'll get to that in a minute. Imagine you're trying to spy on your hot neighbor, right? Now, of course, it's your neighbor lives right beside you. Now, ideally, you're supposed to use like a ladder to spy on your neighbor, right? But now imagine instead of using a ladder, you now decide to take like this rocket ship, right? Now, what that would do for you is that the rocket ship is now uh, far out in space that you can now hardly see the neighbor you're trying to spy on. Okay, so that's how I believe the monthly or weekly time frames are. Okay, for us as day traders, right? So for me, I like to start on the daily time frame and then tune down to a much lower one, especially the 15 minutes for entry opportunity. Okay, so okay, endurance. Let's see what that means. So this is monthly, right? This is monthly, and then I'm going to highlight this. Okay, I'm going to highlight this and then go back to daily. Yeah, it's visible. It's visible. It's right here. It's visible. It's right here. Okay, so we go back to daily, right? So this is what it looks like on the daily time frame. Okay, now on this daily time frame, remember we highlighted on the monthly time frame earlier, we highlighted this 100 price level and then 97.7. Now, looking at this 97.7, if we look back to what happened here, this here is the last low that gave rise to this high, all right, which is the uh, most recent high. Okay, so looking at this structure from 96, all right, price level. If you look back here at 96 too, it was from 96 that price pushed higher all the way to 100. and then we have it back at 96 yet again, and then give us that perfect structure for an uptrend all the way to 100. So what I'm saying is this here is the last low that gave rise to this high, all right? And since this high, price didn't create a new high, right? So this is the last low. And that last low is also a few pips away from 97.7 right there. Now, if you look back, you'll see how important 97.7 is. So it is not surprising to now see that the same 97.7 here is also impacting price, right? So I remember last session here was 23rd. Price was here. This is the candle for that particular day. And I was telling us that if we get it close below 97.7, then it's possible that we see further decline for the USD index, and that what that would mean for Euro USD and Pound USD is that they continue to push higher, right? So what happened here? Price closed below 97.7 for that day, and then ideally we expect price to continue to push to the downside, but that didn't happen. And then if you check what happened back here too, close below 97.7, we had this struggle right here. We had this struggle, so almost as if it's on a spot, right? And then we got this gap, all right? Price gapped to the upside here, and then we got that aggressive push to the upside towards the 100 price level, right? So here we're saying something similar. Price broke below 97.7, currently is now back above 97.7. And that's very significant because it's possible that this is setting up for a potential fake out, right? It's possible this is setting up for a potential fake out. What does that mean? Price closed below a major key level, such as the 97.7, and then we see price closing back above 97.7, right? So a fake out simply stands for failed breakout, right? A breakout that failed. Ideally, when price closes below 97.7, we expect that it continues to push to the downside, okay? Continues, it should be trouble for USD index, but so far it's closed back above 97.7, and like I said, it's setting up for a potential fake out. And fake outs like this usually will trigger an extensive move in the opposite direction. Okay, will trigger an extensive move in the opposite direction. What does that mean? Here, okay, let's use this. Let's use this right here. This support here at 96.8, if you look back, you'll see why that level is also quite significant at 96.8. So here we have price closing below 96.8. Now, ideally, when that happened, especially with this volume that we got right here, this very high momentum at which price broke below 96.8, the next candle, bullish, the next candle, bullish candle, and then close right back above 96.8. All right. So for the period here, it also set up for a fake out. All right. Price close below a key level, close back above it, and then we got that aggressive move to the upside towards 100. Okay. So, like I said, we have a potential fake out on our hands as well. Price closed below 97.7, which is a key level for the reasons that I highlighted earlier. Okay. And then price is now right back above it. Okay. So what it means is that as long as price is above 97.7, it has the potential to continue to push higher from 97.7. And what would invalidate that would be if we now get it close back below 97.7. All right. It's less than 2 days to the end of the year. Okay. It's less than 2 days to the end of the year. And that's something to be interested in, especially how this closes eventually. We have today and tomorrow as the last two trading days for 2025. Okay, for 2025. All right, so I'll be very much interested in how this closes, and then this will guide in making decisions going forward for the major pairs. All right, so USD index, we still have eyes on 97.7. Currently, prices above it. So let's see what it looks like on 15 minutes, which is the perfect time frame for entry. Now, for me, I do not trade this directly, right? I do not trade this USD index directly. Now that I have this understanding of the USD index, when I go to Euro USD and Pound USD and the rest of the major pairs, it's easy for me to look for a trade opportunity, potential to continue to push higher sell as long as this is above 97.7. The same for pounds USD, and then we have all of that as well. Would there be possibly be a triple bottom on weekly or daily as well? Triple, right? I believe that's triple or maybe double, not sure. Endurance, if you want to edit that. Okay, so moving on to Euro USD starts with that. Euro USD. Okay, I was looking at oil yesterday. Euro USD right here. Okay, so of course, Euro USD is essentially the inverse of the dollar index. All right. So while we're looking at 97.7 support for the dollar index, we're looking at 1.178 resistance for the Euro looking for looking at 1.178 resistance for Euro USD. You see how easy that is because we started with the dollar index, and you will notice that I also like to spend more time on the dollar index because, like, again, once you understand that, this becomes easy to trade. Okay, so we have 1.178 resistance for the Euro USD. So that means we're looking for opportunities to sell, all right, while below 1.178. Okay, now we go to 15 minutes. Okay, now on the 15 minutes time frame, this is the 50 period moving average, right? Currently, price is below that. You see how price reacted at 1.178, which is the resistance we're looking at, right? Give us a bearish Arami candle, which is a reversal pattern, and then price is now beginning to fall. You see how easy that is, right? So on this 15-minute time frame, if you missed this already, right, the most ideal entry point would have been after this bearish Arami. You're selling right on this candle, right? As it is right now, price has already fallen, except you're an aggressive trader. That's when you go straight in for a sell. But for me, I would like to see, I'm going to highlight this. Yeah, two things. Number one, I would like to see a break below on this 15-minute time frame now. I'd like to see a break below this support to go in for a sell, or buyers stepping in at that support and then pushing price higher, and then I'll take my sell around after the end of that retracement. Okay, the end of that retracement, right? So two things, like I said, number one, price breaks below this support on this 15 minutes time frame, and then that would be I trigger to short Euro USD. That's one. Or from this support now, buyers step in and then they push the price higher. All right. Uh, Causing a retracement, which is a temporary change in direction. Then I look for my sell around the 50 period moving average. If buyers are able to push price all the way to that moving average, and then that'll be my opportunity to sell. Okay, to sell as long as the the USD index is above 97.7 support. I'm going to have this expectation for Euro USD. One, it breaks below, takes out that support, and then that will be my trigger to short, or we get some retracement to the upside, of course, and then that would also be my trigger to sell, all right, at the end of that retracement. So I'll be looking out for what happens when price finally hits 1.17651 or thereabout. Okay, so next up we have pounds USD. right? Next up, we have pounds USD again on the daily time frame, of course, on the daily time frame, right? So this has been a little bit more aggressive than the euro counterpart, right? So again, price pushed all the way to 1.3, right? 1.3 right here, and then so far it's been bullish. Okay, so for pounds USD, we have support at 1.3492. Okay, why that? 1.3492 and then 1.358. Okay, currently because price is above this 1.3492, that's why I highlighted it here as well. Okay, because if you look back a few pips away right here, and then here as resistance, you see multiple attempts here too, here as support, and then you continue to see more uh, reasons why that level is significant. Okay, so for pounds USD, I have this trend line support right here. All right, I have this trend line support been supporting price since November. Okay, since November, price has been unable to take out that trend line support. Each time price pushed back to the trend line support, it pushes higher yet again. Okay, so for me, for pounds USD, price has to break this trend line for me to switch to a bearish bias for pounds USD. Okay, number one, for pounds USD, right? To take advantage of the dollar strength above 97.7, I would need to see a break below 1.3492 right here. Okay, so far it's almost as if it's on a straight line. All right, it's almost as if it's on a straight line. We've had about 4 or 5 days of price moving horizontally. Okay, so I'd like to see a break below and a close below 1.3492 right here. Okay, and then eventually see a break below this trend line support, and then that would be my trigger to now start looking for opportunities to sell for pounds USD. I need to see uh, something convincing, okay, right? So price above 1.3492 has the potential to retest 1.358 right here, or if from the current level for USD index continues to push higher, then we're going to expect this to break below 1.3492, eventually break below the trendline support, and then that's when I'll be looking for sell opportunities for pounds USD. All right, for pounds USD. Let's see if we have something for endurance. Okay, not yet. Okay, right. So moving on to USD card now. Moving on to USD card. Okay, moving on to USD card. So back here for USD card, back here, it gave us this triple bottom pattern right here. And then at the end of that, we got this aggressive push to the upside towards 1.413 price level. Currently, price is a few pips away from 1.36. All right. If you look back, 1.36 is the level that was responsible for the triple bottom and then price pushing all the way to 1.413, giving us about that's like over 500 pips, okay? Over 500 pips right there, which is very fantastic, right? Now, this right here, 1.374, if you look back, that's the resistance for this consolidation that happened right here. That's why I have this rectangle right here, okay? So that's the resistance responsible for this consolidation. Eventually, price broke above that and then created yet another triple bottom pattern on 1.374 and then all the way to 1.413. Right. So for me, USD card, I need to see a break back above 1.374. That would be pretty much convincing, okay, for USD CAD. Currently, there's no denying the fact that it's sitting on this support level, okay, sitting on support right there. right? And the simple reason is because we see multiple candles on that price level, okay? So for me, from this support now, I need to see price continue to push higher. And then, like I said, eventually closing below 1.374 would be very significant. In that case, that would mean the whole of the price here would be presenting us a potential fake out, price taking out a key level only to close back above it. And then that would be very significant because it's going to be responsible for an aggressive move in the opposite direction. And I'll be looking out for that move, for that pattern for USD CAD. And on the other hand, if price takes out this support, 1.36625 here, if price takes out that support, then I'll be looking at 1.36 here, all right, as the bottom for USD CAD. Okay, that's the daily time frame. Remember, on the daily time frame, we get the important support and resistance level, we get the key levels, all right, and then tune down to 15 minutes for entry opportunities. Okay. Right. So this is the 15-minute time frame, and this is yet our support right here. Currently, price is below the 50 period moving average. Price is below it. So on this 15-minute time frame, I need to see price close above the 50 period moving average. I need to see price close above that. All right. Once that happens, then I'll start looking for opportunities to buy. Okay, on this 15 minutes time frame. I'll start looking for opportunities to buy. I need to see price close above the 50 period moving average. All right, to start looking for opportunities to buy. If that doesn't happen, then it may eventually come to this support at 1.36625, and then I'll be looking at that support too for entry opportunity on the 15 minutes time frame. Number one, it close above the 50 period moving average. You can put this on your chart. It's very easy. Insert indicators, trend, moving average, and then period is 50. All right, period is 50. Method is exponential. Okay, so you have that on your chart on the 15-minute time frame. So I need to see it close above the 50 period moving average, right, for me to long USD CAD on the 15 minutes time frame, right? Because currently, again, you see that USD is the base currency here. And like I said, as long as the USD index is above 97.7, it has the potential to push higher from the current level. Okay. So moving on to USD JPY. Moving on to USD JPY right here. Okay. There's been some hawkish instances from the Japanese government, okay, and believe that is responsible for the bearish move that we now see here, right? That we now see on the USD JPY pair. Okay, so again, we have this ascending channel, right, on USD JPY. It's been quite a struggle. Okay, it's been quite a struggle. So it gave us this double top right here of 157.7, and so far price has been bearish. Okay, so currently it's inside of that channel. Okay, it's inside of that ascending channel. So for this to become bullish for me, I'd like to see price close above break out of that channel. Okay, break out of that channel. All right, I need to see a breakout. All right, break above this resistance right here to expect a pushback to 157.7 resistance. I need to see that. If that doesn't happen, okay, then of course would expect it. Currently, this is acting as resistance. Okay, 156.143. All right. So let's take that to 15 minutes. Again, price is below the 50 period moving average, and you see how the trend line resistance too, how it's impacting price right here. Okay, so what do I need to see here? I need more confirmations to sell. Okay, I need more confirmations to sell, or because USD is the base currency here, from this level now, you see how price, this is the 15-minute time frame now, you see how price has been unable to close below 155.921 right here on the 15-minute time frame, right? Currently, you see how price is again pushing away from that support. So if I get some bullish reversal patterns, if I get some bullish patterns from this level, then it will be an opportunity to long USD JPY, especially if we now get it close back above this trend line resistance, right? If we now get it close above that, then that would be pretty more convincing to go in for a buy for USD JPY on this 15 minutes time frame. This 15 minutes time frame, right? Um, yeah, I'll come back to USD CHF, all right, which also may be setting up for a potential fake out as well, all right. I like trading fake outs. It's a very high probability trade setups, all right. When I say it, I go all in for fake outs like this, especially when it happens, okay. So I quickly want to point this to us on D30 for fans of DE30, okay. Right. So this is the daily time frame again, and then we see this horizontal movement. Okay, it's been pretty much sideways between 24,500 and 23,300 or thereabout. We have this consolidation. All right. Now, usually I say that the longer a consolidation phase lasts, the more aggressive the resulting breakout usually is. Okay, and for an asset like the D30, of course, by the time the breakout happens, you know it's going to deliver fantastic pips. Okay, it's going to deliver fantastic pips, and of course, pips translate to money. So this is one that I'm very interested in. All right. So this consolidation phase, of course, will not last forever. Eventually, we're going to see a break out of this consolidation phase. All right, going to see a break out of that consolidation phase, and again, like I said, the longer a consolidation phase lasts, the more aggressive the breakout usually is. And that's why I'm pretty much interested in what happens eventually for DE30. Okay, what happens eventually for DE30. Okay. Um, Also, so we have resistance at 24,500. Okay, have resistance at 24,500 for D30. All right, in the midst of this consolidation. You see here, price closed above 24,500, which is a key level, and then it closed right back below it. That's a fake out, okay, a breakout that failed. And then, like I said, usually triggers an extensive move in the opposite direction. And that gave rise to, let's see, about close to 1,500 pips, all right? And of course, you can imagine what that means for an asset like D30, okay? Because of that fake out, right? So price is back at resistance, 24,500. So I'll be looking for potential opportunities to sell at that resistance, okay? Looking for opportunities to sell. In the midst of this consolidation, one can still make so much money buying at support and selling at resistance, okay, for DE 30, all right, for DE 30. Okay, US 100, according to who's that? Oishina. Okay, all right, again on the day time frame. One look at this and you can tell it's bullish, all right, aggressively so for that matter. Okay, now we see resistance at 25,770. Okay, see this resistance at 25,770. Right now, if you look back at what happened here, again, this was a fake out. price closed above 25,770. And then ideally, when that breakout happened, we would have expected price to continue to push higher, all right, because of the magnitude of that breakout. Okay, this broke above 25,770. We got a follow through candle, which is also bullish, all right. So ideally, like I said, we would have expected price to continue to push higher, but that didn't quite happen. Instead, price closed right back below 25,770, and of course, that's a typical fake out. And again, as I said, these are high probability trade setups. They usually trigger an extensive move in the opposite direction when it happens. Okay. And in this case, after that closed back below it, it delivered uh this is 1, 2, 3, more than 15,000 pips, right? More than 15,000 pips. That's almost unbelievable, all right? On a pair like US 100, okay? So currently, price is a few pips away from 25,770, which is the resistance. And then we're beginning to see price push away from that resistance, okay? So currently, I'll be looking for opportunities to sell for this pullback, right? Because it's now close to a resistance. So here, I'm looking for opportunities to sell. And this right here will be my resistance on the daily time frame. Okay, 25,550. Okay, so what that means is that as long as price is below 25,550 resistance, then it has the potential to dip further. All right, it has the potential to dip further from the current level. And what would invalidate that would be a close back above 25,550. Should that happen, then I'll be expecting it to push all the way to 25,770. Okay, for US 100. I hope you got that right. So let's see what it looks like on 15 minutes and then go back to USD CHF. Right. So on the 15 minutes time frame, we have price below the 50-period moving average. Again, this is our resistance. You see how price from this high now created this low, created this lower high, and then we have a lower low. So as it is, we expect a lower high, right? We expect a lower high, and then continues to print lower prices from there. Okay, so for US 100, I'll be expecting some retracement into the 50-period moving average, and then that will be my, I'll be looking for an opportunity to sell on a retest of the 50-period moving average, should that happen. Okay, US 100. Right, so back to USD CHF now. Okay, now I added this because it also has a potential for a fake out. All right. Like I said, fake outs I like trading fake outs a lot. When I see them, I like them and then I wait for it to be fully formed so that I can take maximum advantage of that fake out. Now, for USD CHF, this is the level to watch. This is the level to watch, right? 0.792. Okay, 0.792. Okay, this is the level to watch. So back here, you see how price closed below 0.792 aggressively. Look at this huge red candle closed below 0.792. Now, with this momentum, what would have expected price to continue to push to the downside, right? But that didn't happen. We got a bullish candle, yet another bullish candle that closed back above 0.792, and that was the fake out, okay? Right? And then that gave rise to this push all the way to 0.81 or thereabouts. All right. And then back here, we see price yet again below 0.792 with this huge bearish candle. And now what I need to see here will be a close back above 0.792 to set up for a fake out yet again. Right, to set up for a fake out. And that's why this is a pair that I'm very interested in. right? Like I said, fake outs are high probability trade setups. I'm always excited when I see them. Okay, so what I need to see here would be a close back above 0.792. So we have a fake out here, and then we can again expect an aggressive push to the upside, which will create fantastic opportunity to buy. All right, create fantastic opportunity to buy. That's for USD CHF, right? So let's see what that means on the 15 minutes time frame, or what it looks like on the 15 minutes time frame. Okay, right. So we see how it's still pushing to the upside, right? See how it's still pushing to the upside on the 15 minutes time frame. So we have support right here, right? So uh, let's see how it interacts with the moving average. Okay, price is now above the 50-period moving average, right? Price is now above that, okay, which still aligns with our bullish stance for USD CHF, all right? Right, so we have that. If it's a bad habit in trading to add more positions to a winning morning trade, of course it's not. Of course it's not. When you have winning streak, like I like to call it, you want to take maximum advantage of it. You want to take maximum advantage of that when you have that. So as much as possible, it's not a bad habit at all. You only need to time your entries to make sure that you're either buying or selling at resistance or support as it should be. Okay. Uh, okay, Euro CHF. Let's look at that before we call it a day. I'm not sure which one. I'm not sure which one you're referring to, Felix. Of course, FOMC, we started with that. It's one to look out for. We're going to see volatility. We're going to see crazy movements that is expected. All right, but eventually, it's still going to conform with the technicals that we have highlighted so far. But of course, we're going to see spikes. We're going to see fast movement as expected for an important news like FOMC. I'm not sure which one is talking. Felix may want to clarify that, but I want to quickly look at um, Euro CHF, Euro CHF, Euro CHF. Where are you? Euro CHF, right there. On daily, what does it look like? Okay, so support right here, no doubt, right? We see it multiple times. Okay, we see it multiple times at that level. 0.92657. Okay. So because of this support now, we'd expect price to continue to push to the upside, right? But it's been, I don't know, it's been really messy. You see it, just as if it's on one spot so far. But of course, cannot also ignore this support. Okay. All right. So above this support, I would expect price to continue to push to the upside above the support, except sellers are able to push price below that support. Okay. So let's see what it looks like on 15 minutes. All right. You see this sideways movement. How does it relate to moving average? Okay, almost on a straight line as well. Right. So we need more confirmations here. We need more confirmations. It's almost as if it's on a straight line. Um, let's see if we get this squeeze. Okay, we do have that. Okay, so we're getting a squeeze right here. We're getting a squeeze. So, of course, this would break out eventually. So, for the person that requested for UCHF, you may want to replicate this on your chart on the 15 minutes time frame because the direction in which this breaks out will be significant moving forward for Euro CHF. All right. Well, it's beginning to squeeze inside of this triangle. Okay, so we're going to expect price to either break to the upside or break to the downside, and that would be significant, like I said. Okay, for Euro CHF. All right. I'm not sure which one you're referring to. Alib or the Sedu, the trend on D1. I'm not sure which pair. All right. So this will be a fine place to leave it for today. Thank you very much for taking the time out to join. Yeah, that's my problem. I'm really not seeing a trend here. It's almost as if it's sideways. All right. On this daily time frame, you see these spikes that we have right here. However, like I said, this is a significant support, right? This is a significant support. Here as well as support. Here it gave us a fake out. Price closed below this, closed back above it, and then pushed higher. The same thing here. We got this spike, closed back above it, and then it pushed higher. So we cannot ignore that support as well, even though this is quite messy, right? So I'll be expecting price to continue to push higher above that support. Okay. And then we highlighted this on 15 minutes. All right, we highlighted this on 15 minutes. So I'll be looking out for a potential breakout, okay? Breaking above that trend line resistance or below the trend line support, and then that will be significant moving forward. All right, thank you very much, everyone, for taking the time out to join on today's edition of our money market review, right? It's been a great session for the past hour. We have assets that we can add to our watch list. We have assets that we're watching. We have assets for instant opportunities. Thank you very much for taking the time out to join once again. Here is wishing us a great trading day. We do have um, a lovely day ahead and wishing us a great year ahead. Thank you very much. Bye for now.